In this presentation, we're going to continue on with our paying employees process. In other words, we're imagining here in our system that we have a third party helping us with the paying of the employees, such as a paychecks or an ADP. We're taking that information now, putting it into our accounting system. Let's go with Xero. Here we are in our Get Great Guitars dashboard. We're going to start off by opening up our reports. We're going to be opening up both the reports this time, that being the balance sheet, accounting dropdown, selecting the balance sheet here, and the income statement. As the balance sheet opens up, or when it opens up, I'm going to right click on the tab up top, and we're going to go ahead and duplicate that tab. Then we're going to go back to the tab to the left. We're going to do the same for the income statement, selecting the accounting dropdown and going on down to the income statement. As the income, or when the income statement opens up, we're going to duplicate it too by right-clicking on the tab up top and duplicating that tab. So there we have it, balance sheet and the income statement. Now we're going to take the information that we got last time that we analyzed, and we're imagining we're going to get this information from an ADP or a Paychex third party, and then we're going to enter that into the system. So here's what we had last time. We can imagine we have basically this register. This is kind of the register you would have. And now we're going to say, all right, now I got to enter that into the system. Our objective is to enter this into the system to get the financial statements to be what we think they should be, and to get them into a system where we can reconcile the bank account. So these came out of the checking account, so we want to be able to basically reconcile to the net check, which we can do in a lump sum format by hitting the lump sum. And then we'll have to kind of reconcile, be able to add those together, those two checks that add up to that. Or we can enter by employee kind of information into the system. And in that format, we'll have the net checks populate, and we'll be able to basically check those off in our system. So that's what we're going to do here. We're going to enter them transaction by transaction. So we've got this. We're going to say Hamilton. We got to record the gross pay, what was taken out, and then the net pay, which we can consider in terms of a journal entry that would look something like this. Now, we are talking about something that came out of the checking account, the net check. So maybe we can think about this as a journal entry, or we can say this is a payment that we're going to have basically a check type form within the system. So let's go back to Xero and consider that. We're currently on the balance sheet. I'm going to change the date on the balance sheet. I'm going to bring this up to January 2020, update this. Now, we're going to do this one by one. We're going to do the two paychecks, and then we'll enter the employer taxes. What's going to happen when we do this? It's going to be decreasing the checking account by the net check. Then the other side is going to be going to the income statement, where we will have, is this in January? Yeah, we'll have expense like a wages or payroll expense here for the gross check, the total check. The difference between the two is going to go back on the balance sheet as some kind of liability, like a payroll tax payable type of liability down here. All right, so let's go on down to the first tab then, and let's see if we can process this thing. We're going to select the plus button up top, and let's go to spend money. Let's try to use the spend money form, because the checking account is affected for these checks, and therefore we should be able to use the spend money form. So I'm going to say it's going to be coming out of the checking account. Now remember, you might want to set up another account just for payroll to make it go in and out of payroll, and that way you only have the payroll activity in the payroll account, and that could make it easier for you to tie everything out. So some companies will do that. They'll just put money into the payroll account and then process it out of the payroll account, just so they have all their payroll transactions not mingled up with other transactions. That might make it easier if there's a problem, which if there's going to be a problem with a check, it's probably going to be a payroll check, because those are the most complex ones to deal with. So keep that in mind, and as something you might want to consider. So the first one we're going to say is we're going to say our employee is Adam Hamilton. So I'm just going to set up Adam Hamilton. Not going to set him up as an employee because I'm not using the payroll system yet. So I'm just going to set Adam up as a contact here, noting that they are indeed an employee. I'm going to put it as of the 30th. So let's keep it as of the 30th here, and scroll on down. And well, let's put it as the 31st, the end of the month. Let's make it the 31st. All right. Then the description is going to be payroll. Let's say, and we know that the amount then that's going to be coming out. Now, the net check that we want to be coming out, this is a spend money form, which means that whatever the net is going to be decreasing the checking account by. And basically, these accounts down here are going to be the other side of the transaction. So what we need then is we need the payroll liability to increase, and then the expense. We need the expense and the payroll liability. So let's go to the payroll expense first. So let's see, I'm going to say 1, and the expense is 4583.33. And we can see that either here, it's going to be the gross amount, not the net check, or in journal entry format here. And then I'm going to say the account is going to be, let's see if we have a payroll account here. Even if we do it, we probably don't want to set it up, again, to process through the payroll system. But we do have one. Here's wages and salaries. Salaries, and then we have the payroll tax. So let's pick this one and see if it kind of gives us any problem with it, considering we're not processing the payroll through the system. And then the next item that we're going to have is going to be the payroll liability. So then I'm going to say the liability, let's say 1 here, and this one should have been, by the way, 4583.33. And this one is going to be the liability, which I'm going to put as a negative, which could be the sum of these or this number, negative 1044. So I'm going to say negative 1044, negative 1044. And then this should be a liability account. So it's going to be, so it's not under the expenses. Let's see if we have some type of payroll liability. The assets, no. Payroll wages payable. Federal payroll liability. That sounds about right because those are the withholdings we took out. So there it is. And the difference is going to be that 3539.33, which should be our net check, 3539.33, or in journal entry format down here. So bottom line, what's this going to do then? Well, it's going to come out of the checking account for the net check, 3539. And then it's going to increase the expense by the gross check, 4583.33, and it's going to include a liability, which is what we owe, increase in the liability by 1,044. Let's check it out. So I'm going to save this. Then let's check it out. Let's see if it gives me any kind of pop-up or error because I'm using payroll account. No, everything is good. Everything is good to go. So we're going to go up to the balance sheet, update the balance sheet, and then see what happens to it. We're going to go into the checking account. We should see coming out of the checking account the net check, which was at 3539, which that's pop over here while it's thinking that number. That's what should be over here. And so if I scroll down and check that out, there it is, the 3539. That looks correct. Then I'm going to go back up top and the other side on the income statement. Let's go to the income statement. And let's update the report. I don't believe I'm working with an updated report here, and I only work with reports that are up to date. So let's update it, and then we should see the payroll expense down below. And there it is. We put it into wages and salaries. That's for the gross amount, the total amount. And then the difference is going to be back on the balance sheet in the liability for the federal tax liability of 1044. So there it is. Just as we suspected. It happened just as we planned it to happen. All right, so now we're going to do the same thing for Erica. So let's do that again. We're going to go back to the first one. And I'm going to say go to the plus button, and we're going to say spend money. Spending money again. We're spending more money, but it's totally worth it. Erica is an excellent employee. We're going to say this is coming out of the checking account. We're going to go out of the checking account, and we'll do the same process here. I'm going to copy the name. We don't have Erica's last name here. I think it's Smith, though. I think that was what it is in our example problem. So Erica Smith. All right. Let's make this as of the 31st as well. So 31st. Then I'm going to say this is payroll quantity 1. And we'll say the expense side for Erica is going to be the gross pay, the 800 there, or in journal entry format there. It's going to be 800. Either way you want to look at it, one way or the other. Same thing. And then this is going to be wages we took it to. So let's keep to that one. Wages. And then the other side is going to be 1. And this is going to be the amount we took out from Erica, which could be the sum of this or the 170 here. That's going to be a negative. So I'm going to put up the negative 170. That's going to be in the payroll wages payable. Payroll federal payroll liability. That's the one we want. And there we have it. So then that adds up to the 630. That should be the net check. So here's the net check. Everything looks correct. What's going to happen? Net check's going to take the checking account down by the 630. Wages for the gross amount 800. The difference is going to be the taxes we took from them that we have to owe to the federal government on their behalf. The 170 going into a liability account. Let's check it out. Going to go ahead and save that. We're going to go back on over to the balance sheet then. Let's update that report because that's the kind of stuff we need to update it so we see the current thing we did in the change that we made in there. And then we're going to go into the updated report and scroll on down to the bottom. And there we have the 630, the net check that's coming out. There's the net check, net check, net check. Then I'm going to go back to the balance sheet. We're going to go into the income statement, see the other side, which is going to be in the wages. It's not refreshed or may not be yet, but if I click on it, I think it'll refresh as we go into the detail report. And then scroll down and we have the 800 on the gross check. That looks right. Then the difference going into this liability amount here. So the difference is going into this liability. Notice we didn't pay off the liability. This is where people kind of get in trouble, right? Because they got this withholding that they were forced to withhold. And if you get into a cash flow problem and you can't pay this withholding, then it's possible the IRS says, hey, not only did you not pay your taxes, but you took money from the employees and didn't pay their taxes, right? And you don't want to get in that situation because it's kind of like a double trouble kind of information, It's not like you didn't just not pay your taxes, but you stole the money from the employees is kind of the implication there, and then didn't pay the employee taxes. That's not good. So in any case, then we're going to go to the other side of things, and then we're going to say that this one doesn't come out of the checking account note here. So this is just going to be like a journal entry. So we pretty much kind of have to enter this as a journal entry. And so, and these are the employer taxes. So I'm going to go back up top, and this is the part that most people don't really understand, these employer taxes. Because we've all seen our paycheck and our pay stub, so we kind of understand that because we could see them taking our money out of our paycheck. But the employer side, we don't often see it as much. So that side, so this is the employer side of things. Social Security and Medicare, we have to pay. We have to kind of match that on the employer side. So then if we go to the accounting dropdown and we go to our reports, and I'm going to go down to those accounting reports. I'm looking to find where I can enter a journal entry here. I'm going to go to the journal. The general journal, and within the general journal, we can add a new journal, which is going to be a journal entry, the debits and credit type of reports. I think they kind of bury this because they want you not to do this by default. They want you to enter forms first and foremost, if possible. We're going to say this is the payroll taxes, and the date is going to be the 31st, so I'll take this at the end there, the 31st. And then the description is going to populate for us because we had these checkboxes there, and I really like that. That's good stuff. That's good stuff. And then we're going to say that the account is going to be payroll taxes. Payroll tax expense. Now notice that's different than the payroll wages expense, payroll tax expense, and it doesn't include the employee taxes, but only the employer taxes, because the employee taxes are not an expense of ours. Those are kind of the expense of the employee, even though we're kind of withholding them and paying them. That we included the employee taxes in the employee's gross pay. All right, and then we're going to say that this is going to be for the amount of, and I'm going to add them up now for the full 384 because I don't have to worry about the check clearing the register. So I'm just adding both of these up for the Medicare and Social Security for our half, our matching half of the 384. The 384 right there. And then the second side is going to be going to payroll liability, the federal payroll liability for the 384. I think that's it. I think that looks good. Let's post it and see what it does. So I'm going to go ahead and post that one out. Then I'll wait and see if it does anything. It looks good. Didn't do anything funny. We're going to go back to the balance sheet. Let's update the balance sheet and see what happens. Nothing happens to cash right now. What happens instead is the liability went back up. We already had the federal liability on the books because we had the federal liability that was the employee, taken out of the employee check. Now we're including the federal liability that we had to pay over and above the gross pay of the employee, and that's going to be done with a journal entry, and there it is here. The other side then, if I go back up top, is going to be on the income statement. Back to the income statement and scrolling on down, we have to update it. It's not up to date again. Working with reports that are not up to date, and that's unacceptable. If we go on down now, we've got the wages and salaries here, and we also have the payroll expenses. So there's the payroll tax expense. The payroll tax expense only includes the payroll taxes that we pay as the employer. And what I mean by that is notice that the wages and salaries include the gross pay. So in other words, they're including these numbers. These numbers include the net pay plus the taxes, right? That's what the 5383 is. In other words, we have the what we owe to the employee is actually this, even though we took from them that because we're paying it on their behalf. Therefore, their taxes are being included in the gross pay number, and then payroll expenses for the payroll tax expense then it only reflects our tax that we had to pay over and above the gross pay or the gross earnings of the employees.